WorldCom was one of America's biggest telecom companies, but they faked $11 billion in profits and nobody noticed for years. Their CEO was Time Magazine's Person of the Year, but 18 months later he was in handcuffs. Wall Street called him a genius. Investors called him a visionary. But one woman working late at night discovered the truth, and it cost her everything to expose it. This is the story of how WorldCom fooled the entire world, and the whistleblower who almost lost it all to bring them down. Before we dive in, drop a comment and let us know where you're watching from. We'd love to hear from you. If you enjoy true crime stories like this, be sure to like the video, subscribe, turn on the notification bell, and share it with someone who'd love it too. Bernie Ebbers didn't look like a criminal mastermind. He was a small-town guy from Mississippi, former milkman, basketball coach, the kind of guy who wore cowboy boots to board meetings and quoted the Bible in investor calls. But Bernie had something Wall Street loved: ambition on steroids. In the 1990s, he took a tiny long-distance phone company and turned it into WorldCom, the second largest telecommunications giant in America. He swallowed up competitors like Pac-Man. MCI was acquired for $37 billion. Dozens of smaller companies disappeared, absorbed. His strategy was simple but ruthless: grow at all costs, buy everything, dominate the market, and Wall Street ate it up. The stock price exploded, from pennies to over $60 a share. Bernie Ebbers became a billionaire on paper. He bought a lumber company, a ranch, a yacht. He was living the American dream on rocket fuel. Investors worshipped him. Employees believed in him. Business magazines put him on their covers. But nobody knew the empire was built on quicksand. By 2000, the telecom bubble was bursting. Competition was crushing profit margins. WorldCom was bleeding money. But Bernie couldn't let Wall Street know that. His personal fortune, over $1 billion in WorldCom stock, would vanish overnight if the stock price crashed. And he'd taken out $400 million in personal loans using that stock as collateral. If WorldCom fell, Bernie lost everything. So he made a phone call to his CFO, Scott Sullivan, an accounting wizard who knew every loophole, every trick in the book. And Sullivan came up with a scheme so simple, it was almost genius. Every telecom company pays line costs, the fees you pay to other networks to carry your calls. It's a normal operating expense. You're supposed to report it as a cost that hurts your profit. But Sullivan did something different. He called these expenses capital investments instead, like buying a building or equipment. That way they didn't hurt the quarterly profits. They could be spread out over years. On paper, WorldCom looked insanely profitable. In reality, they were just hiding billions in losses. Quarter after quarter, Sullivan's team would make these adjustments. Millions became billions. $3.8 billion, then $7 billion, eventually $11 billion in fake profits. The auditors barely looked. Arthur Andersen, the same firm that missed Enron, signed off on everything. Wall Street analysts were too busy praising Bernie's operational efficiency. The SEC was nowhere to be found. For nearly 2 years, WorldCom fooled everyone: banks, investors, regulators, the entire financial world. But there was one person they couldn't fool forever. Everyone thinks corporate whistleblowers are protected by law. Yet the woman who exposed it got fired and threatened. Her name was Cynthia Cooper, Vice President of Internal Audit at WorldCom, a company lifer, loyal, hardworking, the kind of person who actually read through spreadsheets for fun. In early 2002, she started noticing things that didn't add up: huge transfers between accounts, vague labels like prepaid capacity, numbers that shifted without explanation. She asked questions. Her bosses told her to stay in her lane, but Cynthia couldn't let it go. So she did something dangerous. She started investigating in secret. Late at night, after everyone went home, she and her small team would dig through WorldCom's books. They'd hide what they were doing. They'd work in the shadows because they knew if Bernie or Scott found out, their careers were over. And Cynthia had everything to lose. She was a single mom. She had a mortgage. She had a reputation at the company. If she was wrong, she'd be humiliated, fired, blacklisted. She kept digging, and what she found made her physically sick. Billions, hidden in plain sight, fake entries, fraudulent accounting. The whole company was a house of cards. She took it to the audit committee. They told her to back off. She took it to the board of directors. Bernie Ebbers tried to intimidate her. Scott Sullivan tried to explain it away. But Cynthia wouldn't budge. She had a choice: stay silent and keep her job, or blow the whistle and risk everything. She chose the truth. June 2002. WorldCom announced it had found accounting irregularities. $3.8 billion in fraud. The stock crashed from $60 to under $1 in days. A month later, WorldCom filed for bankruptcy, the largest in U.S. history at the time. $103 billion. Thousands of employees lost their jobs, their pensions, their savings. Investors lost over $180 billion. Bernie Ebbers was arrested in 2004, charged with fraud, conspiracy, and filing false documents. At his trial, he played dumb. He said he wasn't an accountant. He trusted his CFO, but the jury didn't buy it. Bernie Ebbers was sentenced to 25 years in federal prison. He served 13 years before being released early due to failing health. He died in 2020, never admitting guilt. Scott Sullivan got 5 years for cooperating with prosecutors, and Cynthia Cooper became a hero, but at a cost. She was praised in Congress. She made Time magazine's Persons of the Year. Books were written about her courage, but inside WorldCom, she was ostracized. Colleagues stopped talking to her. Death threats came in. She eventually had to leave the company she dedicated her life to. Years later, she said she did the right thing, but it cost her everything she knew. The WorldCom scandal changed everything. It helped push Congress to pass the Sarbanes-Oxley Act, new rules to prevent corporate fraud. CEOs now have to personally certify their financial statements. Auditors face stricter oversight. But the uncomfortable truth is this: Bernie Ebbers didn't start out wanting to commit fraud. He started out wanting to win, to grow, to make Wall Street happy. And when the winning stopped, he had a choice: admit failure or lie. He chose the lie. And it took one woman working late into the night, risking everything, to expose it. So the next time you hear about a company that's too big to fail, or a CEO who's a genius visionary, remember WorldCom. Because empires built on lies don't just fall, they collapse. And they take everyone down with them. If this story shocked you, hit that like button. Subscribe for more stories about the frauds, scams, and schemes that shook the world. And drop a comment.